So I've been thinking a lot about this over the past few weeks. As Palantir rallied 150%, I kept thinking to myself, how can I teach you guys the right way to invest in Palantir, even with the craziness that's going on right now? Because if you look at the market right now, it's flooded with a lot of things I don't like to see. I personally don't like to see emotions. I don't like to see greed. I don't like to see FOMO. And I definitely don't like hypes. Right now, we're in the new hype cycle, which is the AI hype cycle, but it doesn't matter. All hype cycles are the same. They're all created equal. They all put in emotions into an investing game, which is a bad idea. Bringing your emotions to investing is like coming with a knife to a machine gun fight. You're going to get hammered. Now, the way I like to do it as an investor, and that's what we teach in our community, and I'll talk about that in a second, is we learn to neutralize all of this with process, data, discipline, and trust. We have a system. We stay true to the system. We trust the system will work even if it looks bad, and we stay disciplined. We don't budge either way. Now, if you want to learn the system beyond this video, you're welcome to join our community. We have 4,200 members. It's $5 per month, the price of a cup of coffee. I think you should allow yourself to give it a go, especially since I have a no questions asked refund policy. Try it out for a month. If you don't like it, your money back, no questions asked. Now, the link to join is going to be below. I'd love to see you there. We have a weekly Zoom call coming up soon, so would love to see you there as well. Now, as far as Palantir goes with our system, let me give you a taste of what we teach on our Patreon community. Now, what do you do with Palantir now? Do you wait? Do you buy more because you like the company? Do you sell because it ran up 150%, especially if you have a bad day? Well, look, the market moves like this. The market doesn't move linearly. There's no stock that's moving like this, just linearly up, all the way up. It has this way of going up and down, but there's a trend going on here. Some investors, they'll try to time this point, and maybe they get it right once or twice. But how long can you keep getting it right over the course of 10 to 15 to 20 years? It's a very hard game to play. Now, the other way you can do it is actually DCA, dollar cost average. And let me explain what I mean. Let's say that instead of trying to time the market, what we spend our resources on, and when I say resource, I mean financial and emotional, what we spend our time and energy on is locating good companies that will dominate within the next 10 to 20 years and invest in these companies. Now, if we do that, that's the right strategy. Put in a certain amount every single month, every single quarter, every single week, whatever works for you, and keep putting that amount no matter what. Now, that's step number one. That's dollar cost averaging into long-term investments into great companies 101. This is just the entry-level kind of lesson. But I want to give you a taste today of what we teach a little bit deeper using Palantir to show you that there's intricacies to this, there's nuance to this that makes it even better. So let's say we have three types of investors right now. One that's uber confident, like me, for example, who loves Palantir and says this is the next trillion-dollar company. Whether he's right or wrong, it doesn't matter. Let's say we have a medium investor who likes Palantir, but is not ecstatic about it like me, who says, well, this can be a nice investment. And let's say we have a low confidence investor who is in it for the hype, who is in it for a quick buck, who doesn't believe in the company, who doesn't have the conviction. Now, here's what's going to happen. They all put $100 every month like clockwork. Nothing changes. But then at some point, as it usually does with every stock, the dip comes. And the dip will come with any stock. And right now, let's say the stock dips 10% below the previous 52-week high. Okay, it just dipped. So what does our low confidence investor does, who has no confidence in Palantir because he doesn't like the stock, he's just there for the hype? Well, he goes to $0 investment. He stops investing. He keeps his investment. He doesn't sell it because we didn't say he's a bear, right? But he stops adding money to this investor and he stays on zero. Our medium confidence guy, he keeps putting $100. Nothing changed for him. He's still confident Palantir is a great company, so he keeps adding $100. The uber bull, which is me in this case, says, oh my God, this is now half the price it was just a week ago. I'm going to double down. I'm going to add $200 every week because it's red right now. And because it's red, I want to double down. And let's say we keep doing that, we keep doing it. Eventually the stock, like every other stock, rebounds. And then it goes back up. And it goes back up to the previous 52-week high. And at that point, all investors are back to the $100. The Uber bull says, well, at these prices, I'm going to go back down from 200 to 100. The medium confidence investor, he stays at $100, nothing changed for him. And the low confidence jumps back in because now the stock is running up again, so he wants to be part of the train. So he's FOMOing back in. So he feared himself out of the stock, he feared himself back into the stock, and that's how it played out. Now, here's the crazy part. What I just showed you actually was tested thoroughly, and you'll see this result in the back of my screen in a second. So what I just showed you is an example, is a private case of a study that was done by looking at 3 types of investors from 1998 to 2022 for 24 years. Now, this study is published on Substack. I'm going to put on Market Sentiment on Substack. I'm going to put the link to that in the description so you can go and read the study. But basically what they did is they researched 3 types of investors. And those 3 types of investors are as follows. 1 type of investor keeps doubling down when the market goes below 10% of the previous all-time high. 1 keeps investing no matter what, and 1 stops investing until the stock goes back up, and only then he resumes. Now, same stuff as I showed you for Palantir happened. And the only benchmark they use here was the S&P 500 because it's easier to track than a certain specific stock. So with regards to the S&P 500, these were the results of these 3 investors. Bear in mind that within this time frame, we had 3 market pullbacks. The dot-com bubble, the subprime mortgage bubble, whatever it was, and the 2020 mini crash with COVID, right? Okay, check this out. So the investor that would basically the investor that would basically stop investing the moment the market dipped below the all-time high by 10%. So these were his returns. Negative 28% after 1 year, negative 41% after 3 years, negative 11% after 5 years, and after 24 years, he did 123%. Congratulations. But look at what the other guys did. So the investor that kept on putting the money into the S&P 500, no matter what, $100, $100, $100, $100, no matter what, negative 4% first year, positive 15% third year, positive 30% year 5, and 192% in year 24. Of course, don't forget, we're talking about the S&P 500. This is index investing, so the numbers are not going to be mad crazy. Nobody's going to make 1,500% on the S&P 500. But that's just to show you the principle, right? And now let's look at the guy who basically said, hey, I'm going to put in $100 every single time, unless the market dips. At that point, I'm going to keep doing it, but I'm going to add another 100. So I'm going to go to 200, and I'm only going to stop when the market bounces back up again to the previous all-time high, and then I'm going to keep doing 100. That dude did 0.5% in year 1, 17% in year 2. So far, he's very close to the previous guy, but then he starts to break apart. 32% in year 5, and 225% in year 24. So as you can see here, out of the 3 strategies we're seeing on the screen right now, and this is proven by data, discipline, objectivity, not emotions, proven by data, the 2 investors that kept on investing no matter what outpaced the investor that was trying to time the market significantly. And that's with index funds. And between those 2, the one that was Warren Buffetting his way into it, basically being greedy when others are fearful and vice versa, that one actually beat out the one that stayed the course, and they just basically did 100, 100, 100. So this is proof that as long as you can find, assuming you can find a good company, and assuming you didn't get the company wrong, that of course can happen. But assuming you found the right company and you find the next generational cataclysmic stock that will change the world, the best way to buy this stock over the course of the next 20 years as you work towards your retirement is by adding stock every single month at the same pace, 100, 100, 100, 1,000, 5,000, whatever your budget is. And when the stock dips, just double down. And when it goes back up, stop and go back to your original DCA, dollar cost average. This system works. I didn't make this shit up. This is actual studies that show you what's the right strategy to long-term invest without getting emotions involved. So right now you're seeing Palantir going apeshit wild, right? 150%, everybody's foaming. What do I do? This is what you do. But you don't do it until you decide and until you have conviction that this is the next best thing since sliced bread. Because if you don't have that confidence, if you don't have that conviction about Palantir, you shouldn't be investing in this company to begin with, because otherwise you're just playing the greater fool theory. find another stock. There's plenty of other stock for you. Find the one that you're in love with. It's like dating, right? You don't want to be marrying 50 different people. Find the one you're in love with, whether it's Tesla, Palantir, or completely different stock, and do this system on it. This is literally what we teach on our Patreon community. Join us. We have 4,200 members who are killing it. I've posted some of the results on our community feed on Twitter just to show you how our members are absolutely smashing it with this strategy. It's simple, it's objective, and it's not very complicated. All you do is just stay the course and stay disciplined. Now, if you want to join us, if you want to learn this, I urge you, you deserve to spend $5 on yourself per month for this. Join our community. The link is below. It's patreon.com/Tom Nash. Join us, get on Discord, join the conversation right now. Would love to see you. And by the way, another important thing, if you actually want to model your DCF, you actually want to learn about companies, study, research, and do it quickly, I have a tool that's called Stock MVP, stock-mvp.com. It's a tool I built with my partner. It's the best thing since sliced bread, I promise you. Check it out for a week for free. It's the best research tool to find that company you're looking for, that next Palantir. I'm going to put the link below and a quick code, LAST50, so you can get it at 50% off. And as always, it was a pleasure spending these few minutes with you. Thank you so much. I'll see you in the next video.